why would you use the Fibonacci, when you should use the Fibonacci, how you can use the Fibonacci, and where you can use the Fibonacci. So we'll just cover that a lot more in depth.
I do have a question about the Fibonacci that
Yeah,
I'm realizing that's kind of come up in my head
yeah. As
as
you,
you're marking this out. Is like, I think one of the things I don't understand with the Fibonacci is like, okay, so with this one here, let's say it breaks out of that. It just shoots through extreme, like extreme premium and it goes to what's the procedure of healing? You know what I mean? Like there's some point where it reverses and it goes from extreme premium and then it comes out of that. And then like is there anything to watch for? Is there anything to, you know what I mean? Where um does it do I am I making sense?
yeah, can you mark on the screen? Just
Okay.
yeah, just mark the area you mean. Like, is it going higher to run out these highs, or is it going?
Yeah. Yeah, at some point, you know what I mean? Like we use Fibonacci, it usually is very effective coming to the extreme level, right?
Yeah.
But at some point, it comes out and it goes up here. You know what I mean? It just gets out of this. And I'm kind of like wondering what's the process that it works its way out of this zone and what can I look for?
Yeah, so if
Does
I
that
get you correctly, what you mean is, let's say price keeps going to the upside and then runs above here, right?
yeah.
What next? That's your question, right? What next? If price
Yeah,
goes above here.
I guess so, but I'm also like wondering what are the signs that this area is not going to hold also?
So the signs that this area is not going to hold is when you're seeing that price is consistently creating higher highs on, like for example, you can see that we are on a weekly time frame, and this weekly time frame had just one impulse leg.
Uh-huh.
So it seems quite obvious that price is just trying to create a higher low, and then we can continue higher. But let's say, for example, that we're looking at this price action and price has already created a higher high, higher low, coming in here, rejecting there and displacing impulsively, breaking structure on a higher time.
Hmm.
That's the market already giving us a telltale sign that this area can actually be a strong resistance area that will push price lower. And then
Okay.
that means our next draw on liquidity will be equilibrium. Inside, we will look for an imbalance or liquidity. That price is going to come down into a discount to mitigate before we can now start looking for a continuation to the upside. So we just need to see like a significant break of structure from here for us to
Uh-huh.
confirm that this area is really, really pushing us lower. Now, for example, if we take this on the weekly, you can see that weekly time frame. Now, in as much as we have all these weeks, and this isn't a break of structure, but it still hasn't still broken below this low.
Uh-huh.
If price had dropped down, broken below this low, that could now start giving us a telltale sign that maybe this market actually is hunting for something below here. Now we now have to scale through time frames to figure out what could that be. It could be a higher time frame imbalance. For example, let's say it breaks through that low. Now we're seeing there's a higher time frame imbalance here. This higher time frame imbalance. We can see that, and it's resting directly above equilibrium. So now we can say, okay, maybe this is the next draw on liquidity. We'll mark it out and then we'll wait to see if price will land in there, tap the equilibrium, go into discount. Now we'll start looking for buy signals for us to buy to continue higher because overall it's still bullish.